If you don't know Rebuild or haven't heard of Rebuild, we're a property wholesaler in 10 markets in 6 states. Our flagship office was Lexington, Kentucky. We also do lending. We have Rebuild Capital, and we do hard money loans. And then we have our newest company is National Title Services. So we also do title for your deals. We're very investor friendly for title. We do blind HUDs. If you're a wholesaler, we do A, B, B, C closing. So we're very familiar with that product or that process. So please give us a shot at your title work. We'd love to take some outside files. But I've asked Tim Van Wingerden.
Yeah,
is a friend of mine for a long time. He's been an investor in real estate. Are you from Lexington?
For the most part, yeah. I guess half my life.
Half his life from Lexington. But Tim is now a commercial agent with Marcus Millichap, and they do. He specializes mainly in large apartment complexes, large multifamily. So I'm going to let Tim take the floor. If you guys have questions for Tim, please hold them to the end, and then he'll get to them as they come. Thank you all. Welcome, Tim.
Thank you, Scott. Really happy to be here, guys. It's going to be fun to be able to talk to you a little bit about multifamily. And it always surprises me just how traditional the real estate industry is. And what I mean by that is a lot of our relationships is really what is going to bring the next opportunity. And so we find a lot of deals within network. And so this is a great chance to be able to meet some players, large and small. And so I would encourage you, if you don't do this, to make it a point to get to know and meet some new people every time you come. So that's a good way just to be able to expand your network and overall just build a business. And I mean, that's really what we're all doing here. It's about building a business. And yeah, I want to talk a little bit about how that looks, a little bit more on the commercial side. And for those of you that, actually, I'm going to go ahead and just let's leave our egos out the door. And I'm going to ask a few questions to you all, if you guys participate. I know it's okay, it'll be fun. Let me know, for a show of hands, how many of you all own real estate? Okay, so pretty much most of the room. How many of you all do not own real estate yet? Besides your home, do you own any investment property? Anybody that does not own any investment property? Yeah, so we've got a couple of new people in the room that are looking to do that. And so that's where I really want to be able to speak to both of you all. Those of you who are getting started, and then those of you who do own real estate and you're wanting to take your investing a little bit to the next level and get a better understanding of how things work more on the commercial space. And so I do want to give you a little bit of background about myself and how I got into this. Because I did not think I was going to be going into real estate a couple of years ago. I actually wasn't even that long ago that I came here for the first time. And I remember, I read a bunch of real estate books. It was pretty interesting, Man, I thought this would be a really good opportunity maybe to build something for retirement. Didn't really know where it would take me, right? And so showed up and kind of a little nervous. You meet all these people, you have no idea who is who, and it's just a great chance to be able to get to know people, put your neck out there. And that was when we were meeting, I guess, over at the library. But I was at the time working for my family business, and we grew flowers for Lowe's and Home Depot at more of a wholesale level. We were one of the industry leaders in the nation, 8th largest greenhouse in the nation. And so very more business-minded, how can I use real estate to kind of grow this? And it wasn't until my father ended up selling his business where that caused me to think, okay, where do I want to go? And how do I want to take real estate to the next level and really start investing and working full-time in the industry? And that's what led me towards the commercial brokerage. And I really wanted to be able to network with high-capacity, efficient people who were go-getters. And I felt, man, if I can network with all the owners in the entire market, I'm going to learn a ton. And then I can be the best broker that can understand the market. And that's what we do as brokers. We're getting in front of people, getting in front of owners, and really walking alongside of them as advisors. We're talking to the market, we're understanding the market, and so with that, we're able to provide guidance and give them informed decisions when we do that. And so I do have just a little bit of an intro about just about our company, which I won't spend too much time doing, but Marcus Millichap, if you guys haven't heard of Marcus Millichap, we're one of the leading brokerages in the nation. This is specifically for multifamily. There's about 80 or 90 offices or so across the US and Canada, and all of us pretty much operate independently, and we join teams together and work alongside each other. And so this is the team I work with. It's based out of Cincinnati. I focus primarily in Central Kentucky in multifamily, and I only focus in multifamily. And as a broker, you can pretty much choose where you want to go in terms of different asset types, but we find that by being able to focus in on one asset type, we can really get to understand the market, understand the different niches and the overall complexities that there are, and that can help just provide an overall guidance and level for the owners that they need. So, a couple recent deals that we closed. This is Clay's Pointe. It is a subdivision over in Elizabethtown, Kentucky. 62 units. It was a really fun deal. The owner, he was a local doctor who developed these with his partner. His partner ended up passing, and he wanted to retire, and he didn't want to have these. And it's always fun when you can present your analysis to an owner, and he's just shocked at what he thinks that we can get for him in the market. And we ended up getting him an offer and taking this one closed in 28 days after getting it under contract, which is pretty quick in today's market even. And yeah, so that was a lot of fun.
Cash or finance?
It was financed with a local bank. Yeah, I can get you connected to the bank if you want to know. So it was recourse debt at 90% LTV. So they got some pretty solid terms. It was a really very well maintained deal, and the owner was more than happy to take that offer before we even went to market with it. And a lot of times we will push to go to market and really create a competitive environment for a seller. But at the end of the day, we're going to do what the seller wants us to do. And so if they're really set on wanting to move quickly, transact quickly, we'll be willing to do that, and we'll do whatever they want, right? Giving them the ability to make the informed decision while providing the guidance that we think is best. And so in this instance, it was a strong offer, it was a good offer, and we advised, look, it's worth it to go ahead and take this before going to market. Worst case scenario, we'll know within a few weeks whether or not we should go to market. And so those are decisions that we can help owners make along in the process. This is the Pops. It's a 96 unit property over off Man of War in Palumbo. The ownership, well, it's not. It'll change here pretty soon. There's another. Once it finally connects, you guys will see. But it is a 100 unit deal here in Lexington. And the ownership for this particular deal, pretty different. I mean, there are more institutional grade type of owners. They had a big debt fund, and they dabbled in multifamily. And so from this standpoint, it was more of a transactional type of conversation where we're looking and they're reaching out to us and trying to get an idea of, hey, I think this is time for us to go ahead and sell because they wanted to hit their certain return threshold and criteria. And so what we did was really look at the deal and provide them where we believe we can get pricing in for the market. And it was a little low. It didn't really hit where they wanted to be. But they gave us the permission to go ahead and put it in front of some key clients that we work with and some buyers that we think that could take this down. And that's where we transacted with the deal off market. Hopefully it'll pop up here pretty soon. I don't have much of a slide presentation other than I want to talk with you guys about really how we underwrite deals, how we look at deals, how we look at opportunities. And I want that to be able to help you provide a framework for looking at deals and also being able to build more deal flow for those of you who are already in the game there. So I don't know if you guys have any questions about any of those deals before we move on to that next section. I know that asking questions in a group can be a little intimidating, but
Let me see if I can get that.
Do you focus here in Lexington, or are you all over more of the state?
I focus in Central Kentucky. I'm based out of here in Lexington. Yeah, so E-Town has been on fire recently because of the Ford plant coming in. And so a lot of investors, especially the long-term owners or mom and pop owners who are local, they're wanting to go ahead and sell while it takes some chips off the table with that news, because I mean it just immediately gave them a 20 or 30% premium on their price, and so that's pretty hard to say. Yeah, go ahead.
Are the buyers normally like local, or are they from out of the state?
When the deals get larger, the buyers are usually come from out of state. About 75% of the buyers that we're procuring are usually out of state buyers. The smaller deals usually end up being local deals, and I define smaller, anything under like 70 units or so would usually be more of a smaller deal. Once you're above around 90 or so units, that's when you can justify having on-site management. And because of that, it attracts a lot larger pool of buyers, those who can pretty much operate from anywhere. And so, yeah, we typically, when we're marketing deals, it does end up being a little bit more out of state. And that's just because we're good at what we do, and we really want to drive that value. So let me go ahead and move into how we look and value a deal. And like I said, what we typically do is we are walking alongside owners and working as advisors. So if you're an owner and you're interested in the overall value of your property, we're going to help you come up with a pricing that fits in line with where the market's at. And we're going to just provide that guidance here. And so, again, we're working within their best interests and driving that price as much as we can. If we can't get it, it's not a problem. Yeah. It's just a photo of a deal. So
that's all you got.
Yeah. You can drive by it. It's right over off Man of War in Colombo. So I want to talk about how we should look at underwriting a deal. And I don't want to get too detailed into the numbers. I think numbers are certainly very important. It's very important to know how to read a profit and loss statement, understand how a rent roll works and whatnot. But I don't want to get too bogged down with those details. I think there's a lot of information online, great information online. Come up to me and I can provide some resources there. But I want to help you just ask a few questions as you're looking at deals and getting deals for brokers. And then we'll talk a little bit more about communicating with brokers and the best way to just build broker relationships. Again, in this market, or in this business that you're building for yourself, your business is based on the relationships you're building. And so a broker, my job is to get in front of owners and talk to every single owner in this market. And so by networking with brokers, you are getting connected on a second tier level to the owners in the market. And so it's important to be able to build those relationships with brokers so that you can get deals. And I know what you're going to say. Tim, you just told me you're spending all this time trying to get the top of the market value. Why would I ever want to buy a deal from you, right? And I'm going to say to that, we work within our seller's best interests. I just sold a deal, 20-unit deal over in Clarksville, and I sold it in 24 hours because the sellers just wanted out, and they're desperate. And so a lot of times it has to do with the motivation level. If you're the one that's talking to me and I know you're able to transact and close, I'm going to be talking to you. And so I wouldn't discount that too quickly because that's really how you're going to find deals is by networking. Anyway, when you look at a deal, before you even take a look at the numbers and really start looking at the market, the first question I recommend that you ask is, or understand, is what is the owner motivation and reason for selling? And the reason for that is because that can really determine how you're going to draft your offer and how you really look at the deal. Because an owner who might want to see a price, but he's just really more curious about where the market is bringing, and he tells me, oh yeah, well, I'll take it for some astronomically high number. And that is going to be an owner who's pretty low in terms of his motivation for sale. And it's important to understand that because even if you spent all this time putting together an offer and you've got the number that he wanted, there's still a chance he might not even want to sell. And so when a property is listed, the best part about a property being listed is that if we hit that number, that owner is going to transact. There's motivation there. They're communicating motivation and they're prepared to go ahead and go through the long process and stressful process of selling a property. These properties take anywhere from sometimes 60 to 90 to 120 days to sell. And an owner that is willing and ready to sell is great. And so that would be the first thing I would recommend looking at is asking wherever you're getting your deals from, what is the motivation here? You know, when we're looking at wholesale deals, what Scott does, a lot of the motivation is very highly motivated sellers. What do they want to do? They want to get rid of a property that's a problem for them. And typically they're not as sophisticated, that's not always the case, but you know, they may have inherited a property from a family member, or they may have some unforeseen medical bills, or they're going through a divorce, and they're going through these problems and they're wanting to get this property sold at a discount. Well, as you get higher in terms of price, you're typically dealing with an owner that is a little bit more responsible when it comes to managing his money and his assets. He's like not going to want to just give away his property. And so with that, you want to understand, okay, what is the decision-making process here that's happening behind the scenes? Because if you think that way, you're already a step ahead of the game. Because if you're only thinking in numbers and spreadsheets, you're going to miss deals. You're going to miss out on opportunities that you may have not seen. And so, and that allows you to get creative too. I mean, right now in today's market, we're looking at very creative ways to make deals get across the finish line. I mean, a short sale clause is something where you can, a short fall clause is something where if debt doesn't hit, the lender, the appraiser doesn't make it, we're talking with sellers about carrying a piece of that note so that the deal can still close. In a market that is very volatile, that's important creative ways for you to think through things. And it's important to know what's the seller is thinking and what's happening, because no matter how big the property is, no matter what size property, there's still a person behind it. And we don't want to get carried away. It doesn't matter if we're selling. We sold a $32 million development deal over in Louisville, and I mean, it's still an owner behind that property. And so, you know, it's not always this public institutional company that doesn't have a soul, you know? So just remind you of that when you're thinking about things. Now, this is going to be a little controversial, and if I get pushed back, I'll appreciate it, and I'd like to hear your thoughts maybe after the speech. But the second thing I would say to do is to stop thinking about, initially, hear me out, stop thinking about the property as a tangible asset, okay? Look at the numbers and think about it as a business operation. Because the way commercial properties are valued, it's based on the income and the expenses coming in. And so if you're thinking about it, if you can think about it from more of a business perspective, you're going to be able to find an opportunity that somebody that is just looking at it from a physical standpoint that they might not be able to see. Somebody who's just looking at a 70s product and saying, there's no way I'm going to pay $75,000 a door for 70 products. And if they're stuck on that and they can't look at it from a business standpoint and look at it from the income, expenses, the revenue that's coming in, and looking at it in the full picture of what's happening in the market, then you're going to be able to beat them out as a buyer and get aggressive to do that. And so, of course, it is very important to know property, to know different dates of construction, kind of what happened during those areas. So there's certain things you can look out for your due diligence. But in general, when you're underwriting deals, that is a good perspective to look at that can get you an edge that somebody else might not be able to see. So when it comes to financials, the two financial pieces we typically ask for, if somebody wants us to provide a valuation, we're gonna ask for a trailing 12 profit and loss, so we can see the historical performance of the property over 12 months, and then a current rent roll on the property. The trailing 12 profit and loss is gonna give us an overall picture of how the property performs over those 12 months. And what we are typically looking for is, if we can get it in monthly columns and kind of see what's happening that year, we're going to look for abnormalities. We're going to try to see if we can find, hey, did something happen in the utility budget in June and July? Why is it $2,000 higher than the overall average of the rest of the year? And some of those things we can adjust, because what we're trying to look at is how the property is overall operating. We're not trying to capture one-off expenses. We don't want capital expenditures to get stuck into the operating expense line and completely skew how the deal looks. And so we're trying to see, okay, you know, did the owner replace water meters? Why is the repairs and maintenance budget so high? Or in a lot of cases, smaller properties, why is there no repairs and maintenance budget? Just because an owner is doing all the work himself doesn't mean we can just leave it out. And so, we're looking at these trailing numbers, and what I would leave it at is we're adjusting it so that we can get to an overall understanding of how the property typically operates. And then 2, we're making some adjustments for taxes based on when the property, if it sells, the tax bill will change. And so those are 2 things to look out for. Now, the rent roll is going to give an overall picture in time, snapshot in time of the revenue that's being brought in. And so that's going to give you the present revenue overall. And so with those 2 financial metrics, you can get a good idea how the property has been operating, and right away you can quickly see if you can't quickly see, what I would encourage you to do, this is a great exercise, especially for those of you who don't own, is to reach out to every single property that is on the market right now and ask for the financials so you can view it and look at it. And then do your underwriting and compare it to the broker's pro forma, or the broker's opinion of value. Because that's going to really start helping you see what's happening in the market, and you can start learning, okay, why does this rent roll, or why does this T12 look different? Why did the broker make that adjustment in this pro forma or this analysis? And that can start help you just develop some experience. Because with all these questions we're asking, we're on a fact-finding mission. Okay, we're trying to figure out what is this property, how is it really operating, and what's the truth here, right? And what opportunity can we present into the future so that an incoming investor sees an opportunity, they can get an adequate return. And when we're trying to do that, what we want to make sure we're understanding is there's so many different variables that come up. It takes a lot of experience to be able to see, okay, what's a one-off variable and what is actually there. So those would be the two financial pieces that are important to look at. And that's as far as I want to get into when it comes to looking at and crunching numbers. I think there's a lot of good models that you can download, and there's good resources on Bigger Pockets to look through that. But at this point, we have an understanding of what's past, what's present. Now we're going to peer into the future. And peering into the future requires a good understanding of what's happening in the market. All right, all of us, well, most of us, is everybody here from Lexington? Anybody outside of Lexington? A couple people outside of Lexington, maybe some groups outside of Lexington. Good, so this will be helpful then. I'm going to talk a little bit about the Lexington market and use that kind of as an example when we're looking at markets. But you want to have an idea, an understanding of what the market drivers are in your market. And that is from a couple of different levels. First, the overall market, then your specific sub-market, and then even drilling down deeper and knowing what's happening within that street or within that neighborhood. Maybe that's not as much of an economic driver, but an overall, what is particularly happening to that property. If you notice that, hey man, this property is just not performing well at all, there could be a very practical answer as to why it isn't. Maybe there's just a property next door that's just completely run to the ground, and that's pulling away a lot of tenants. Who knows? So when you're looking at the market, Lexington is a smaller market, and it fares pretty well in times of recession because our rents are never going to be as high as these primary markets like the Nashvilles, Indianapolis. Even Louisville lags behind to some of these very primary markets, coastal cities and whatnot. And it's overall very diverse. A lot of us are really familiar with the overall urban service boundary that doesn't grow, and then the developmental pipeline that's pretty much locked. And that creates a couple of things. One, it stops a lot of developers from developing more multifamily, and it makes it very limited. That drives up the pricing. And then also, it forces a lot of investors to reposition properties. And so we see a lot of times B properties, which would be a 1980s construction, 1990s construction, going through a renovation to target a higher tier rent. And so we see that happening a lot in Lexington. It's pretty healthy from that standpoint. Agriculture and horse industry adds a level of additional jobs and work that other markets don't have. And then you still have a pretty good tech hub within Lexington, along with, of course, the university and the overall healthcare system that really creates a very diverse economy and overall pretty healthy regarding like what would happen in terms of a recession. And so that's something you want to look for. It's pretty easy because if you're looking at 100 deals in the same market, you only need to learn that like once, and then you just keep staying up to date on it. And so I would ask those questions, say, what are the market drivers? Where's population going? You know, just really where are people working? In Lexington, over half of the residents commute from outside of Lexington, which is, you know, makes you look at the surrounding counties and think, hey, that could be a good area to invest in too. And we're seeing that right now, where rents are just kind of spreading outside of Lexington in some of these places. And so then you want to look at the overall drivers in the submarket. The deal we closed, the Pops as an example, there was not a lot of new development activity. There's a strong retail corridor, the hospital coming in over in Hamburg area. All those are strong signs when our buyers looked at that deal that, hey, there's still a lot of rental growth and ability for us to drive value on this property and justify paying such an expensive price because we're seeing the opportunity here. The current owners, they put $2 million into the property, completely rehabbed everything, put in granite countertops, new cabinets, felt like they were at the top of the market of rents, but yet we're still able to look at what's happening in the market. We're seeing a 20% year-over-year rent increase in Lexington, and a lot of that is from just a lot of tenants being priced out of homes and the renter pool growing, the overall jobs expanding. And so with that, there's the ability to get very aggressive in terms of what you can pay based on those trailing numbers. And so that's really looking into the future. And then finally, I think this is probably the biggest question right now in today's market is what is happening at a federal and national level in the economy. And so our conversations right now are very much focused on debt. Why? Because the interest, the rate is going up like every single month. And you know, when we're talking to buyers, we're asking them, hey, who's your lender? Let's get on the phone and talk with your lender. Do you really think you can lock in your price right now at 4.5% when everybody else we're talking to is at like 5.5%? You know, I want to talk and understand that, because what we want to do is find the strongest buyer to be able to get the deal closed. And so it's good to know those things. And again, it might sound a little intimidating if you're first getting started, but remember, all those questions you have about a specific market, you're going to it's going to start becoming a little bit more natural because you're going to be seeing it reoccur on multiple different levels. And then when you start investing and looking into a new market, it's kind of fun. You get to learn that over again, and it gets a little bit faster to do that. So how do we look at a property and determine where we think the rents can go? Do we just, a lot of people, you know, make fun of us because they think we blindfold ourselves, throw a dart at the board, and they think, yeah, that looks good, let's just raise it up, you know, $200, $300 and just send it out. No, what we do is we look at the overall competitors and what's happening in the market. And the best way to choose comps really is being able to find a property that is one of two things: a relatively comparable property, or a property that we think that the property can eventually compare to after we've put in a decent amount of money. And so, you know, if you're looking at a 70s product and you see an 80s product across the street that has been recently renovated, getting about $500 more in rent, that could likely be a strong comp if you think you can get your property to look like that after you've put in money. And that would be more of a value add type of play. And so when you're looking at comps, try to pick properties within the same vintage, within the same year of construction overall, if you can. And then what you want to do is look at kind of where the streets are and really find properties that can be, like I said, some that can be comparable to the property today, and then some properties that you can peer into the future. Now we'll get a lot of kickback as brokers because we'll throw in maybe the newest property on the street. And every once in a while I'll get buyers call me and they say, you really think you can get your rents to that price? And the answer is no. I don't think I can get my property that's 1980s construction to compete with a 2020 property. But I like to know where that market is, because if we're looking at A-class properties, and let's say the 2 bedrooms are renting for $1,800 a month in that market, and now we're looking at the rents for a B-class property, and its rents are $900. Does a $900 rent gap between A and B class, is that really justified for the tenants? And so you want to look at it from a tenant's perspective when you're choosing comps and when you're seeing that. If you see that amount of difference from your A-class product to your B-class product, there's a lot of room for your rents to grow. And so there's likely a runway of growth. Typically, you see that A-class properties, they raise the rents, they stay on top of the market in terms of where those rents are going. And so they're constantly setting a new bar. And so the B-class product can ride that wave into the future, and that's where we're looking to be able to do what we want to do, is increase their revenue and operate the property better than the current owner, because that's going to put more money in our pockets, in our investors' pockets. And overall, that's kind of the play there. So that's just kind of an overview of looking at the comps. At the end of this talk, if I can get this to go up, I'll walk us through a little case study of the pops, show you kind of how we chose some of the comps and what we're looking for. And the numbers are a little outdated, but they would still give you an overall picture of what we're looking at there. So I don't know if you guys have any questions about just how we're looking at deals, how we're analyzing those, and what we're trying to do for owners. I don't know if there's any questions before I move into the next segment.
Got one over here.
Are the main 2 financials you're looking at the rent roll and the 12-month trailing? Or is there any other important reports that you guys typically look at on the bigger deals?
Yeah. There's definitely more. I think a lot of times we'll be asking about delinquency, because with COVID, there's a lot of tenants that just aren't paying, and so if there's a significant amount of bad debt on a property, that would be important. Another thing we'd ask for too is the loan documents. A lot of times owners would be wanting to sell, but they don't realize they have a nasty prepay or defeasance on their property. Right now, we're in a position where a lot of loans, it might be advantageous to assume a loan. And so the debt piece is a very important piece when you're looking at your underwriting, especially in today's market. And that's where what I would do is get connected with a lender, with a lending broker, or if you don't have any properties at all in the market, talk with some of your friends or anybody you might know who invests, and kind of try to get an idea of what debt looks like, because that's a big piece. And for every deal too, you might jump into some things and you realize you have additional question marks, and that's where you might go back and see, like, I mean, if you're talking to a more institutional grade owner, you might be able to get like an entire schedule of CapEx. That'd be great. For the most part, it's usually an owner verbally telling me, oh yeah, I replaced the roof in 2018. I replaced, I guess, about 50% of the HVAC units. But if you're talking with somebody who's pretty sophisticated, they might be able to pull a report of literally their entire, here's all the HVAC replaced, here's all the roof replaced. And so the more information we can get, usually the more accurate we can get in terms of where we believe the market is going to price the deal at. But usually we can get by with a profit and loss and a T12.
Vacancy reports as well?
Yeah, vacancy reports. It's helpful to understand the historical picture of these vacancies. We typically, those 2 numbers, especially because in today's market right now, it's so forward-looking that a lot of what we're looking at is how we're going to be operating it in the future, that there's not right now as much of an emphasis on the trailing or on the current rent roll. But as the market begins to shift, we're already seeing lenders get a little bit more pushback, and that's where there might be additional reports. Lenders usually need a lot more reports than us, because what we're getting are the best we can get in terms of, hey, here's where we think we get this property prices out, and that gets you about 90% of your answers typically.
Got another one.
Yeah. So you talked a little bit about looking ahead into the market in the future. So Besides just reading local news, is there another place that you look for information for the future of market and the development of, let's say, Lexington? Where do you usually look to for that information?
Yeah,
what are you looking for specifically?
Yeah, the Biz Journals is pretty good. The Kentucky like EDU Gov website, they talk a lot about different developments that are happening. I like to look at those. I have somebody who works and screens some stuff and just sends it over to me all the time. And so I begin just to follow different news outlets. So I really like Business Journal, Crane Watch, CoStar has some good reports. And then because of the algorithms these days, once you click on a couple of those links, they just start showing up on your phone or on your feed. And so at this point, I don't even know where it comes from, but I usually see it.
That's a good question.
Thank you.
Yeah.
Since commercial properties are kind of value weighted on like cap rate and stuff, what things are you seeing that sellers are doing, say in their T12 or beforehand, to boost their numbers, maybe even artificially? Like say I reduce my maintenance expenses even though I'm still getting work orders coming in, to try to boost my numbers and get my evaluation higher. And how does M&M address those types of situations?
Yeah, and I think what we see very often is, it's like, oh yeah, I've got this guy mowing the lawn for me, or oh yeah, I've got somebody that just works for me, but they don't really work for the property, they just kind of work for me here. And what we typically are looking at is we're going to underwrite to lending standards. And so if we get a T12 that's particularly thin in terms of the expense line, we're going to have to bring that up and look at that. And we're going to typically ask the owner, hey, look, what's going on here? It just doesn't seem like there's a lot. Oh, well, my property just operates that way. And it's like, well, okay, I understand. That's great. You're doing a great job operating your property. But if we're going to get this deal under debt, which 99% of buyers are doing, we're going to have to underwrite to lending standards. And so that's where we'll usually put in some market norms there. And yeah, I think the most common is usually a worker they have that's not technically under the property, maybe like some maintenance or some lawn care that gets there, and then some other income sometimes gets pocketed by the owner, and then they just say, oh yeah, for laundry it's like $100 a month or $100 or $500 a month or whatever it is, and that's where we can, at the end of the day, we're going to use our best judgment of being able to present something where, on a fact-finding mission, providing the most amount of that we can. But I always tell owners, look, it's garbage in, garbage out, right? If you're providing me just half the truth, we're eventually going to find that out as we go through our due diligence and inspection process. But it's going to be 4 to 6 weeks down the road, and who knows where the debt market's going to look? Who knows if the second buyer, who is a little bit lower in price but stronger that we didn't choose, is still ready to play. And so that's where it's a conversation we're having up front, trying to manage our sellers' expectations and really communicating the importance of having the data right. But yeah, good question. Okay, so what I'll do is talk a little bit about just communicating with brokers, how the best just tips and tricks on approaching us for those of you who either don't have anything that you own, or those of you who are looking to expand and get and build your business. This business it's a relationship business, as I've been saying for the most part. And I remember my dad, he would always tell me, he said, Tim, it's not what you know, it's who you know. And that's really true, and it's really true in this industry. And so when you're looking to grow your business and really take it to the next level, you're going to want to continue to expand your network, and make it a point to expand your network. Make it a point to reach out to people and get that meeting or have that cup of coffee. And what might feel like it's just you're spinning your tires, you're eventually going to start to develop traction and build that. And so as you're wanting to look and grow and find deals in the market, a couple of good tips just when you're talking to brokers like ourselves of how to just kind of, because look, there's really only one first impression that you make. And if you're talking to a broker and a broker can tell pretty quickly that, hey, this guy doesn't own at all in the market, and he's a little green, like he just, what is that communicating? That's communicating that you're probably not going to be able to close the $6 million deal that you're asking about. And you don't own it all either. So the time of spending is not going to result in a paycheck in a long time. And so for a broker, we're all 100% of what we do is based on our activities. Eat what you kill type of industry. And so we're always looking at what is the highest probability this is going to get me to the closing table. And so with that, we need to be pretty careful of our time. Those of us who execute in the market are going to be very laser focused on spending time with the people we know we're going to be able to get a deal done, and eliminating those who, not eliminating, but of course always wanting to talk to the up and coming people in the business. But it's just something to make sure you're aware of when you're reaching out to brokers. And so a couple of things I would say is, if you are looking to buy and you want to reach out to a broker, I would recommend that you be specific. Have a buying criteria. In general, property can be segmented however you like, but it's typically segmented by vintage, so the year of the property, whether it's 70s construction or 80s construction. Maybe you want to stay within a certain year. It's almost always segmented by price point. So maybe you're looking within $1 to $5 million in purchase price. So you should know what your purchasing power is. If you either have partners or a lender that you're talking to, know where you need to be at on that size in terms of size. And then unit count, sometimes we'll talk in terms of unit count. Some investors will not want to look at anything under 100 units because they want to get management on site. Another thing would be just property class, whether they're an A-class property, a B-class property, a C-class property. That can be a relatively subjective term, but it helps just to provide that or think through what area you want to invest. And then the overall investment and opportunity. So that would be like, hey, a value add deal. I want to go in, put in value, and then refinance out and repeat. I want to do that. Or maybe it's a core plus deal where it's relatively just, you want to just passive return, you want something that's a little bit more turnkey. So those are some of the things that you want to be able to have answers to before you get on the phone and talk to somebody. So that's the first thing, be specific. This isn't in any order, I just thought about a few here. And be transparent. Don't tell me that you've got $100 million to spend if you don't, because as brokers, we end up getting a sick sense in this industry, and you can kind of just feel and know who's telling the truth and who's not. Because we talk to a lot of buyers in the market, a lot. And so just by saying that, it usually kind of brings out some red flags for telling me that. So be transparent with where you're at. If you don't own anything, try to see if you can leverage a partner that can either call with you or that you can kind of be their bird dog in a sense and help them find a deal or something if you don't have any traction yet in the market. And so that would be some recommendation there. If you end up communicating with a broker and they do send you a deal, if this deal is an off-market deal, it could be a really good deal. It could be just a deal that a broker can't sell and they want to send it to you. If you get a deal from a broker, provide feedback. Take a look at the deal and let the broker know whether or not this doesn't fit your criteria or if it does. By doing so, what you're doing is you're starting to build that relationship where you're either getting on the phone real quick or sending a quick email and letting the broker know, hey, this doesn't really fit with what I'm looking for because of X, Y, and Z. That's helpful. It helps us to understand what you're looking for in the future. So if we find something, we're like, hey, this is going to fit perfect for Jim, and so that's something important too, to be able to provide feedback, and it just helps to establish that relationship and build it. It's important to talk to more than one broker in the market. A broker is going to do what he can to build all his relationships, but he's not going to be able to capture every single owner. And so you're going to want to build a database of brokers in your market and get to know them and talk with them. You're not going to connect with all of them, but that's going to give you more deal flow and more understanding. It's fine. I think loyalty is a great thing, and I think a lot of guys we talk to, they might stay loyal with the broker who brings in the deal. They're going to sell through that broker. That's a great thing to do. I think that's a good way to kind of manage those relationships. But it's expected that you're going to be talking to multiple brokers. No different than, it's a little different in the residential world. A lot of times people will have their agent and that's their go-to agent. And I think that's something to be said for that when it comes to leaning on a broker for advisory and overall like market understanding and intel, it's good to lean on, you know, maybe a broker that you've got a strong relationship with. But if you're really hunting for deals and trying to get aggressive, it's important to build a network, because that's going to give you that much more reach. If you are new, focus on the brokers who are up and coming and newer in the market. Don't reach out to the guy who's 30 years in the industry, because he's already developed a very strong network of people in his pocket where he's got very good relationships. A broker who's newer in the market is going to be more willing to work with you and more willing to go to bat for you. A lot of times in the commercial space, we're typically going to be double-ending most of our deals. We're going to be representing the seller, and a lot of times we're representing the buyer. And so with that, we're going to try to do the best we can to find the buyer that we know is going to close. And so if you're working with a broker who's newer and you're newer, they're going to do what they can to go to bat for you and get you this deal. And so that's important piece just to pay attention to when you're looking to grow. Respect a broker's time. If a broker sends you a deal and you're looking at the offering memorandum, don't ask a question if you can find it in the offering memorandum. It's good to give them a call before you even look at the offering memorandum and get kind of the pitch of the deal, get the overall scoop, get the story, you know, ask about the owner's motivation for selling, you know, and understand what's happening. But don't ask too many pointed questions that can be found in the package, because what you're showing is that, you know, I mean, I can't tell you how many times I've had 30, 45-minute conversations holding somebody's hand through the package, right? Why would I want to answer the phone the next time you call me, you know? So just be aware of that when you're looking at deals, evaluating deals. Be respectful of their time. And be understanding too. A lot of times we like to do business with people that we like. And you know, there's going to be times where you might feel like your broker did not really represent you the best way to the seller, and it was his fault that you didn't win the deal. And you know, it can get kind of emotional. I mean, these deals, you're chasing down, you're fighting against competition, and when it doesn't go the way you want it to go, it's easy to cast the blame. And a lot of times us brokers will take the heat on that. And you know, we're going to work as much as we can to allow the seller to make an informed decision and provide all the information. But at the end of the day, it's the seller's decision to make. And so be understanding, be fun to work with, and that's going to help you win some more business. So that's it. I don't know if you guys have any questions. If you guys want to stick around, I can try to see if I can get this to work, and we can look at the case study. We'll just kind of gather in if we want to do that. I don't know. So.
Thank you, Tim. Anyone have any questions for Tim? He's going to be here for a little while hanging out, so feel free to pull him aside and chat with him one-on-one. And make sure you get his contact info. Does anyone here invest in the Gorge? I know Chris does. I know Jim does. The Red River Gorge is like up and coming in Kentucky. The property values have gone like 4 to 5x times.
I would like to.
You would like to? Anyone else would like to invest in the Gorge? Yeah? Yep. All right. Well, good. My next speaker here is John and Tom, and they're brothers, and they are looking to start a brewery in the Gorge. So I'm going to let them talk a little bit about that, and then we can bring Tim back up for a case study.
Hopefully you guys get connected.
All right, that's good. So hold the microphone. That's perfect for me.
This one will be quick, guys. It's not going to be another 30 minutes.
Be as quick as we can possibly complete. How many people have been to the brewery? I mean, has been to the Red River Gorge? All right. Sounds like a lot of people have been here. Go ahead and hit this one. This is a proposal for a brewery in the Red River Gorge. And I don't know if you've been to the Gorge lately, but the place is blowing up. It is absolutely insane on how much development has come over the last few years. I've been an avid hiker since 2010. I've been hiking the Gorge, and I would spend most weekends there exploring and just being in in Powell County. And over the years, especially in these last 5 years, I've noticed an accelerated growth of development in terms of restaurants, in terms of activities. They're putting in a putt-putt place. But I just want to give you some numbers here, and I just put this together today, so bear with me. The Red River Gorge draws upwards to 750,000 people a year. The activities that include hiking, camping, rock climbing, kayaking, zip lining, birding, rappelling, the underground gorge. I don't know if you guys have seen that. That's the underground kayaking in the caverns. So there's a lot going on there, and it's getting more every day. Go ahead. And the Red River Gorge is not just the gorge itself. It's also Natural Bridge State Park. It's also Muir Valley, which is the home of one of the world-famous rock climbing locations in all the world. So you have about 102,000 rock climbers come there every year just to go and climb in this area. And here's the other thing that's going on in the gorge. In 2.5 years, there's going to be a resort that's being built. That some of the projections are 500,000 visitors a year, which would raise the gorge annual to from 900,000 to about 1.4. $18 million in wages and $79 million in local economic impact. And let's take a look at where it's going to be. So right here we have the gorge right here. We have the natural bridge where everybody is probably familiar with, like Miguel's Pizzeria and these locations right here. And then the gorge is, and then the new resort is going to be over here in red. So we got kind of a triangular effect going on. And it's a very exciting time to be a part of it. Well, if you look at Zillow, at the property values in the gorge, you're not going to be able to find anything. As you can notice, here's where that location I just showed you, it's almost completely blank. With this lone property being 6 acres for $90,000. And a few years ago, because I personally bought property in the gorge, you could find a property for about $1,000 to $1,500 an acre. And those days are over. And so, go to the next one. So, I mean, what's going on in terms of food and drink? Well, I mean, everybody's familiar probably with Miguel's. How many people have eaten at Miguel's Pizzeria? Yeah. All right, a bunch. Everybody that goes to the gorge has probably been there. But there's some other establishments that are coming up, like, for instance, the Red River Rock House, Skybridge Station, La Cabana, Hops, Thatcher's Barbecue, The Brick. This is all accelerating to where you can see where new developments are coming in. And you can go to the next one. And so I'm going to use Miguel's as a great example of what I'm talking about in terms of development. This used to be right here. That used to be it. When you went to Miguel's, you went to this little shack, and it would take you about 2 hours to get a pizza. That's exactly what happened. But now they have built this whole addition onto the back of it. Not only have they built this whole addition on the back of it, they've got, go ahead, the next one. They've got picnic tables. This doesn't even do it justice. There's probably 20 more picnic tables this way. They built this entire complex right here for rock climbers. They have right here Airbnbs and places to rent and shower houses for people to go. One of the biggest reasons why you've seen so much of a development is that in 2018, Powell County became a wet county for the first time. So for this entire time, Powell County has been dry. But since they are now expanding, Miguel's Pizza has 4 or 5 lines. They have several taps of beer on brew. They have a brewery type environment without being called a brewery. They're just blowing up. Some additional developments that are going on right now, of course, there's zip lining down there. There's kayaking. There's the Gorge Underground, rock climbing. There's a reptile zoo. There's wedding barns. There's a distillery. This is an example of this building right here. Initially was one of the places that I was like, that would be a great place for a brewery. It's right next to La Cabana Mexican restaurant, which is over on this side. But I was afraid that it was a brewery. But no, it's a distillery, and it's going to be opening up soon. There's also this incredible putt-putt place going on. So there's just a lot of activity going on in the Gorge, and it's exciting to be a part of. So yeah, why is there no brewery in the Gorge? Well, as I said before, Powell County was dry until 2018. And of course, we all remember what happened in 2020. We lost 2 years, and no one knows what happened to it. So I mean, this whole area is now blowing up since COVID is the whatever. People are ready to be back. There's also that established brewers. Like, so you would go, why is it you know, Ethereal down there? Why is it West 6 down there? Well, it's because they make profit down there as well. They sell a lot of beer in this area, so there's no reason to rock the boat. And my biggest take that I want you guys to understand is that time is of the essence. There may not be a brewery right now, but there's definitely going to be one. And in my opinion, I think it's going to happen probably in the next 6 months. So this is why this proposal is kind of, right now, throwing it at you so you can think about that. All right. So this is, go ahead to the next slide. Okay. Yeah, it's kind of a duplicate slide. Sorry about that. Tom, do you want to talk about a little bit about craft beer?
Yeah, sure. So my name is Tom, and I used to run a bar back in the day, and now currently I work for a beer distributor in Northern Kentucky. I sell Bud Light and a bunch of different craft breweries. How it all came about is my brother and I talked about if we could ever do something together when we were in Montana. We're like, I would put a brewery in the Gorge. I deal with Cincinnati breweries. I go to them all the time. The market is very saturated, but it's not saturated at the Gorge. So we've been talking about setting up a brewery and doing it as quickly and as cheap as possible in a sense. So, so like craft beer in general. So craft beer holds a 12% beer share of the market, which you may think is not a ton. It's kind of gone down the past year, but the money that comes in of the $94 billion in the market, 24% of that is craft beer. The type of person that visits the Red River Gorge is a craft beer drinker, hikers, climbers, all that kind of stuff. I mean, most people, if you're going to be at the Gorge, you're going to go to a brewery. There's no brewery down there. Tap rooms are very profitable. That's why you see, I don't know if you've seen it here, but in Cincinnati where I live, you see multiple breweries putting tap rooms all over the market because that is where they make money. So we have a plan to kind of supplement that. So I kind of commented here, I said like a lot of the craft breweries locally are trying to capitalize on the popularity of the Gorge. So like Country Boy, who I sell, who I love, I know those guys, they have a Red River Gorge themed beer where they name beers after like trails and certain locations. There's Dreaming Creek does Natural Bridge IPA. So people are trying to capitalize on that market. Is that you again?
Yeah, it's me again. All right, so I mean, hopefully we showed you that the brewery is a good idea in a place that doesn't have a brewery and it has a lot of people. I mean, I don't know if that's a really hard sell.
Yeah.
So, but how much money will it take to start one? And this is the important thing. Go ahead, Tom. It depends on a lot of factors, but it's not as much as you would think. And the reason why that it is not as much as you would think is that we are going to propose that we get to the market first, which is, and we'll explain this in more detail, is third-party brewing. But the main cost of where we think that this upstart would be is finding a location. That's the #1 thing, because if you go to the Gorge, it's crazy right now. And like places that there is nothing really commercially available, and the stuff that is commercially available is way overpriced and doesn't utilize what we need from it. So, so our goal is to find a location, get to the market first, establish the brewery at minimal cost to investors. This could be a simple tap room that we build, or with a central focus on outdoor spaces. That's another of things that people don't realize, that you don't have to build this giant building for it. You just have to build a place where people can get beer. And people are there at the Gorge, so the outdoor spaces now becomes important. You throw a couple of pergolas up, throw some flowers up, and they're outside. And that's really why people are there in the first place. You can also not simplify your menu. Just have food trucks pull up on it. So Our proposal is that we're going to grow the brewery in 4 phases. And go ahead to the next slide. And I'm going to talk about, first I want to talk about location. And so I've got it here on this map. I don't know if you can see it, but I'll point it out to you. Watch that. I'm going to slide right by you. Is that we have 4 options that I've identified as possible places that we can maybe put this thing in. And so option 1 is here, option 2 is there, option 3 is there, option 4 is there. This is the Slade exit. Do you guys know anything about the Gorge? That's where you get off. That's where everybody gets off. I mean, there are a couple exits down this way, but in reality, that's the center right there. Going down this way is the Natural Bridge, is Miguel's Pizza and all the other restaurants. And going this way, Not a Tunnel is the entrance. I mean, how many people have gone through Not a Tunnel? Well, so my main focus is going to be right there, where no one has put anything at all. There's a couple locations that I want to talk to about. Go ahead. Well, and I'll go through these locations. This is a good map right here. There's 3 entrances to the Gorge. So you kind of want to find a place that is centrally located. You have the entrance that I was talking about, Not a Tunnel, which I would imagine that most people go through. This one is the Gray's Arch, and it only goes up to the Tunnel Ridge Road, so it's not really an entrance to the Gorge proper. And then over here is the Sky Bridge Station entrance to the Gorge, where you can go to Chimney Top Rock. They have a Sky Bridge Station over here. That's another bar that acts like a brewery, but it's not. It's over here in this location. But your real focus is the traffic is going to be right there. So that's kind of where we're going to be focusing on our conversation. But you know, these are just options. Go ahead. So my option 1, which if you go back to, can you go back? Yeah. So option 1, sitting right here, right at the turnoff from Not a Tunnel at the very beginning of the road. This used to be an old store of some sort, where it has been converted to a residency. You can go to the next part. And actually I know the numbers on what this guy wants for it. I do know the numbers. He bought it probably for $300,000. He's been offered $600,000. He wants $700,000 for it. Well, the way that I'm seeing the prices, that's a no-brainer. Because if you go, can you go back to the?
Yep. What's it zoned?
Well, it's zoned commercial because it was an old store. So
is that the zoning you need for a brewery?
That is the zone that you would need for a brewery. And the thing about that is that there's also very loose laws. We're not talking about a infrastructure like Fayette County where you have all these rules and regulations. I mean, you're talking about. I mean, yeah, I mean, it's like the Wild West out there. There's a lot of people going out there. I mean, there's. That was my project. But so here is. That's where the new resort's going to be, right? So it's going to be right here. I'm talking about building right there where all the traffic is going that way. So, but I've actually talked to this guy, and he has a number, and so that's option number 1. And I'll give you an aerial view of it. Oh, you just go ahead. Skip the next one. So this is what it looks like now. He sells firewood and tie-dye t-shirts. And the guy was like, I'm making a killing on the tie-dye shirts out here. You're like, you wouldn't believe the traffic. And I'm like, yeah, that's right. I'm making a killing, I can imagine. And it's true because Stu, another partner, his wife and my partner, they both bought tie-dye t-shirts from this guy. Like, they bought 9. So this guy's making a killing. But he probably can get $700,000. Yeah, that's what it is. So we'll keep it. Let's go to the, let's see, this is the overhead of it. So again, this is what the property I'm talking about right here. Old store, zoned commercially, there's Not a Tunnel. Let's go to option 2.
Is Four Guys done developing, or do they have more acreage to expand?
RV park? Well, let's go back to that.
The RV park's right across the street.
Yeah, so, yeah. From this picture, the RV park is like right here, right? I mean, it's right there. They look like they are expanding every day. I mean, they actually just put in a wedding barn themselves. Like, so they are expanding, and that's what I'm saying is that a lot of this, even the other options that we're going to show, is that development is coming out that far. It is going, this is the central location, and maybe in some ways the best location, but it may not be. So let's see option 2, because option 2, so option 1, the pros are it's a great location, it's across from the resort, several acres and room to grow, already zoned commercial use. There's a small restaurant that opened last week right across the street called the Lunchbox. It looks disgusting, but it's still there, you know? The cons are it is probably the most expensive property that I'm going to even talk to you about today. And it also would need a building, because he tore down that old building and he built his own, but I don't think that's going to serve our brewery purposes. So there's extra cost there. Second option is a garage, which is a stone's throw away from the location I just showed you. And it's a garage just near not a tunnel and the road. And as you can see, it looks like a brewery. Put some new paint on it, throw those doors up, open. This is a property that's just sitting there, and what runs right behind it is the South Fork of the river. So the back end of it is something that you could, put a porch up there, have the river out, and throw those doors open when it's hot and have people out. It has parking. Go ahead to the aerial for that.
Does it go all the way to the river?
Yeah, it does. I'll show you on this. I should be able to show you. So it's the South Fork of the river. It's not the Red River. It's a tributary of it. But you can see it running through right back here. And so we're talking about this little guy right here, right? And it is actually coupled with this property right here. So, I mean, in essence, if we ever approach this lady who's a 78-year-old widower that probably has no interest in that property and talk with her, maybe she would be able to part with both sides of it. But this is also, right here is where it was the last property. So it's very close.
Are those deeded separately?
What's that?
Those two parcels?
No, they are actually together. When I looked in the deeds, they are together. But I mean, it's one of those things that maybe you just be like, well, how much just for the old garage that you're not using? Yeah. But I mean, that is a building. We'll go to the pros. Well, in the pros, it's also a great location. It's potentially cheaper than the other options. And it's also got the South Fork at the back of it, and the owner owns the other. I already said all this stuff, so I don't know why I'm going through it again. But the building already exists. That's an important thing to think about when you're talking about putting in a brewery. The problems that has it is the property is smaller, the owner is uncontacted, and possible property price is unknown, and it could be a possible floodplain. These are not all the cons, but I mean, it's just part of it. Here's another one. Here's the Ledford Bait and Tackle. Has anybody been to the Ledford Bait and Tackle? Probably not, because I've never seen anybody out in front of it. These cars, perhaps, but I mean, they're probably the owners. But I mean, if that doesn't also speak as being a brewery, I don't know what else does. And this location, if you look on the map, is actually right next to the Shell station. I mean, the Shell station is right over here. It is more centrally located, and it's got great parking, as you can see. And again, there's no businesses over here yet, besides the Bait and Tackle. And the problem with the cons, I guess, with the Bait and Tackle is that there are many unknowns. I mean, I don't know. He has a business there. He is doing something. But, I mean, whether he's making a lot of money selling worms, I don't know. So he might be killing it, and that might be something to talk to him about. But, I mean, it's also zoned commercially, as we were talking about it. Option four is the hauler. And what I mean about that is that personally, I own 120 acres of the Gorge that is close. It's about 8 minutes from not a tunnel. I own 120 acres of a hauler that goes way back. But I don't own this 16 acres. I don't own the front of it. And so potentially you could come to these people, tell them, hey, you know what, buy you out for $75,000, whatever, for your acreage, and then now we would have 135 acres of a full hauler to deal with. You could put it back a brewery in there, and it may be some of the cheapest of the options, but it's not centrally located. unsure of the zoning and needs a building. So there's some cons to that one too. All right, well here's what I just want to give you. This is an example of like how crazy the Gorge is and why that $700,000 to buy the non-tunnel property is not such a bad idea at all. Because one, the guy that owns that is a private owner and he can be bought. This is being sold commercially. This is the old general store that's on the way to Miguel's. It's right after the exit. It's for sale right now. You can buy it. And it is listed for sale for $650,000. 1 acre, $650,000. And as you can see, that's the parking right there. Not good for a brewery, but my point is that I don't think it will sell for that, but somebody sure as hell thinks that it will. So, and that's the location of it right there. So we're talking, the properties I was showing has potential for growth, parking, whatever. This has none, but yet they're wanting $650,000. And that's the kind of market that you're in. All right, so the major part of this idea is to get it to the market first. And how we propose to do that is through third-party brewing. I'm going to hand it over to my brother and let him talk about this. He is he ran his own bar for 10 years, and then he has now been in the brewery industry. How long have you been as a
5, 6 years? So yeah,
a beer seller? So he's on both sides of it. So I'll turn it over to him.
All right. The idea was, how can we start a brewery with the cheapest amount of money, and how can we get going to beat everybody else in the market, because brewing equipment costs a ton of money. So when we talked about it, I was like, we could gypsy brew, contract brew, nomad brew. It is where you go to another brewery who has equipment and all that stuff invested, and they make beer for you. It happens all the time in the beer industry. A lot of your locals.
It with your...
Yeah, so you can go and we work and we make a recipe, and I can say I want a light lager, I want a red lager, blah blah. 'Cause I don't know how to brew, but I can talk to those guys, and then they brew it for you. They contract it, and you can either get a keg to you and you pick it up and ship it over to your brewery. But Miller Coors does it, Sam Adams. Right now, I don't know if you heard of Taft in Cincinnati. They started a separate brewery that pretty much just takes all just people trying to keep up with their own breweries. They take contract brewing, so you can have somebody brew your product. I know several people in the industry that do it now, and I know that we could get it done for us, and I could get it worked out. So that's what I was telling. I think that's the smartest way to go without having to put in $500,000, $100,000 worth of equipment.
Is that how much the equipment is?
It could go, like, you can get the smallest barrel system, which would probably be what we need. You could probably get it for like 40, 50 grand as a start. And then, so if you go with the contract brewing, you take a little bit on your overhead, but it's still way cheaper than getting beer distributed to you from other places. So
you go in West 6, how much of that equipment costs?
Probably a lot. And like Country Boy, that facility is millions of dollars of equipment. So so you can use
I
that.
just think, like, eventually, as you got it off the ground, you can offer tours and stuff as you get.
Oh yeah, yeah. And that's kind of, so the process of how we kind of were going, we're like, I have kind of an answer for why you may not be a real brewery at the start of it. Yeah, so it saves on startup capital. And an example, I don't know if you've ever seen before, of a success story of a contract brewed business. This is Montucky. We've actually found them a few years ago in Montana when we were out there. They don't have a brewery at all. They just, pretty much they're all marketing. It was two guys wanting to start a brewery. They couldn't raise the capital funds to do it. So they had money for marketing, and they got it contract brewed with a badass can, and it's actually spreading across the United States. Kentucky just picked it up. I've been trying to get it for a long time. Yeah. Montucky actually means like hillbilly out there. So if you think it's a compliment, it's not. So, but when I was walking out there, I was going to buy. We were in Montana. I was going to buy some Busch Light, and I saw that, and I saw that horse. I'm like, Montucky, I got to buy it. So, they're contract brewed. They are growing at a massive pace. And one thing they do that I think that this brewery would copy is like a give back policy. So they do an 8% goes back of their profits. I think we could do like a 5%, something that goes back to the Gorge to invest in the community, to get locals. And then most millennials nowadays, like 67% of millennials, are going to buy into a product that is like conscientious. So that would be the plan. That's a success story. The phase one would be like we would find the property and look for potential growth down the road. So whatever we found we don't want to be landlocked or just shrunken down. We would contract brew. So my idea would be like 12 taps. We would get contract brew 3 to 4. Then we feature only local Kentucky brewed other beers there. So like, let's say I go to Country Boy, they brew our contract brew for us. I'll in return put 4 or 5 taps on for them. We lose a little bit of margin on their beers, but I think it would still succeed, and it would just help us grow and get a good footing in the market. Let's see. So we would finalize the established name. We really haven't done that yet. We'll
talk about the name here in a second.
We'd obtain a license, remodel the building to have the tap room, bathroom, small kitchen. To save on space, we may move the kitchen outside to like a shipping container, kind of food truck area. And then to save on money and overhead, we could also like build a kitchen and then lease it out to like another person that wants to have their own kitchen. So this is a couple examples of like hiking themed breweries that are very popular. Oscar Blues, they're out in Colorado. They're the first craft beer to put in can only. And then Long Trail, they're just in that market. I think that's kind of the world of craft beer and hiking and nature and all that stuff together. So phase 2 would be purchase equipment to do small batch brewing on the side. Then we would feature some guest brewers. You know, we can get people to come in from other breweries just to kind of brew batches and stuff for us as we grow. And then we would probably can the contract brewer could do that for us with their own marketing. And then we would focus on the marketing and improving the taproom experience. Phase 3 would be we'd purchase more brewing equipment to actually brew on site. We would hire the full-time brewer at that point, and then we'd remodel to make sure that we were rolling. We'd maybe purchase a canning line to do it ourselves, and then maybe self-distro locally. Brewers in Kentucky now, if you're under 5,000 barrels, can self-distro. So once we actually get beer, if let's say Miguel's wanted to put us on tap, we could just drive it down the road and make that sale. Up until this year, we couldn't. It always goes by a third-party system, which is what I do now, is I work for a distributor that is in between the supplier and the customer. And then like stage 4 would be like expanded distribution statewide as we grow and hire a sales team and maybe look to expand to a second location. Let's see, cost. So the kind of initial cost I'm thinking, like depending on the building and what we get, we're kind of looking at low end. I think we can make a kitchen, you know, a hood, fryer, all that kind of stuff for 40 grand. But then also it may go on up just depending on the thing. You know, if maybe we don't have the location, we don't need a hood. We could just, that's why Subways don't have hoods. We could just do a deli shop or something like that in there. Tap room, large cooler, you know, bar, taps, lines. Everything kind of just depends on the building we get. If we could put the cooler right behind where we're going to build the bar, then we don't need a glycol system that's an extra 10 grand to keep the lines cold as you send the beer to the tap. You know, outdoor space, you know, obviously with the Gorge, everything's dependent on outdoor space, so we try to make it fun. Marketing, merch, logo design, everything comes down to marketing. I know some people that have designed like Braxton's logos. He's done albums for like Shooter Jennings, things like that. I've talked to him about designing something for us. He's on board. And then like, you know, staff, hourly management. I think about 15 grand for a startup on food cost, if we do kitchen plus the food. Insurance, depending on the building, I would put an estimate about 40 grand. The bar and grill I used to run was about 32 a year, so I was kind of thinking it might be more. It could be less. It all depends on the situation. And then potentially getting a van or truck to ship the beer in between, or we can have that third party ship it to us when we do it between our contract brew, and then licensing, depending on how we start, around 5 grand would be, if we're going to sell cans, we need a license to sell cans. If we're going to sell growler, you know, it's all, if we're going to carry liquor, it all depends on where we're at in our stage of the business. I think, all right.
And so, what do we call this brewery? Well, we have a couple ideas. One of the main ideas, and I think one of the better ones, is Sheltowee Brewing Company. Does anybody know what the Sheltowee Trace is? It's a trail that runs from Moorhead, up from Cave Run, all the way down to Tennessee. It goes through the Gorge, and it goes through Cumberland Falls, that whole area. It's a 350-mile trail that is Kentucky's hiking trail. It runs through the center of the gorge. It also means turtle in, I think it's Shawnee, and it refers to Daniel Boone's nickname. So the Sheltowee Trace Brewing as an option is one that we could expand on. So if we ever did expand to other areas, Sheltowee Brewing would work in Cave Run, it would work in Cumberland Lake, it would work in almost the entire eastern Kentucky because it runs through there. So tap rooms could be developed still off of that brand. But there's also another options because we were talking about putting this brewery on Not a Tunnel Road, Not a Tunnel Brewing or Not a Brewing. It really depends on where the location is, I think, before we would actually settle on a name. But we have some ideas. Let's put it that way. And so we're also talking about how big of an investment we're talking about. Well, there's a wide range of possibilities because in some ways, if you were to go to the holler, you could probably put a brewery in for $450,000. That's all you would need. If you were to go to put it on right on Tunnel Road, the guy wants $700,000. You probably need $1.3 million to put a brewery in. But it's not crazy because our costs are cut because of the fact that we're doing this third-party brewing, which allows us to get to the market way before anybody else, and it allows us to start selling beers that are under our name, to establish ourselves in a place where there is no beer. So as you guys can think about, being first to market, it has a value to it. So being able to get there fast and quick and cheap is something that I don't think other people will be thinking about when they're talking about building a brewery. They think millions of dollars, but it's not. And so, you know, if a property that we get, we have to build one. Of course, you could build a very simple, like a steel building, couple of sliding garage doors, a lot of outdoor space. You know, you could put something in very cheap for $75. You could also go up and put something a little bit better for $350. But if there's no building there, you're going to have to. That's going to be another cost. And so, as you can see, location means everything because you don't really know how much it's going to cost until you get there. But I think in any of those locations that I've talked to you today, any of them, it could be, you could build a brewery from a range of $400,000 to $1.5 million. I think it's a fair estimate on any of these options that we've been talking about with you today. And so this is my last slide, but I mean, who will run it? And the answer is we will. My brother has the experience and both as a general manager of a successful bar as well as the beer distributing knowledge that is invaluable. I wouldn't even have this idea if it wasn't him just talking about beer. And if you talk to him afterwards, talk to him about any beer you want. The guy has knowledge that is impressive.
He's an expert.
Yeah, he's an expert. I'm going to say he's an expert. For myself, I am in the fortunate position to where, as an attorney here in Lexington, Kentucky, I've got associates that I would literally just be like, all right, you want that? I'm going to do this idea. Because I would love to get out of being in the attorney game. It's not fun. If you guys are any attorneys out there, it sucks. But so I would much rather move over into this arena. So I would dedicate full-time effort onto this, and I think my brother's
move there.
I have property there, so yeah, I would.
Would you, Tom?
Yeah, we talked about
Are you
it.
married?
No. So I just got to bring the dogs, so we're good.
Yeah, we're just bringing the dogs. That's it. We're good. I'm not married, but I have a partner that she is behind me in a lot of this.
No kids.
No kids though. No, just dogs. I mean, we'll bring the dogs too. So yeah, we're pretty much the dog guys here.
Okay.
But so I mean, that's one of the things that we're offering. We're offering the knowledge. We're offering the ability that I did not put any slides up here in this, but I know this area. I do tax liens. It is part of my attorney work. I run tax lien companies. I don't know if you guys know about tax liens. Maybe you probably all do because you're real estate investors. But basically, it's kind of a way to build equity in properties that are abandoned or whatnot. But I've been doing that in Powell County for the last 5 or 6 years, and I've been able to see this. I know the people there. And so I would be able to do our own legal work. So that's a valuable commodity to have as well. So, and Stu right here, he's our other partner. He is a, he's a businessman. This guy knows the other things that I don't know. And,
you guys are the creative genius.
no, but this guy, so I feel like we have a very strong team in place in terms of taking this idea and going with it. What we need is, I just don't have the money. I personally don't have it. There are some of the lower ends that I've considered about like trying to reach on my own. But I think that, like I said before in the beginning of this, time is of the essence. And like, if I could wait for that big case to come across the table and have the money to do it, but I don't know how long that's going to be. And I feel like if we don't act now, then you're just going to be drinking at someone else's brewery. So that's really why I'm here. And I know it's not something that you guys are normally listening to, but I really appreciate, Scott, for you inviting us here to talk about it. So we're available to talk about this afterwards.
He hit me up like last week and was like, hey, would you meet these guys? And then like we started an email chain, and then I'm like, I have no time next week. However, on Wednesday, I'll have an audience. So come in and talk to this group, and it might be something that they'd be interested in. So I knew Chris and Jim had property in the Gorge, so I thought it would be a good match.
Yep, and I appreciate it.
If y'all are interested, make sure you get their info and connect with them.
Like Asheville and I personally think the future of the Gorge is going to be like a mini Gatlinburg.
Yeah.
Have you guys ever been to Asheville, North Carolina? There's like 16 breweries. People go there to hike and camp. I think it's an in-state one. I think they're investing into that area. I think it's a prime time. I think anybody that goes there in the winter time, I think it's going to change. Right now, the Gorge is very seasonal. I think it's going to change. Chris was saying before, his Airbnb was not even available during the winter, right?
Just on the weekend.
Yeah, every now and then. So like,
It was rented on the weekend.
Every weekend.
So it's growing, and before that wasn't the case. And a lot of the food, like 5 years ago, we go to Miguel's, they would close down, but now they're staying open later and staying open. I think it's going to grow. That's why we're just trying to be the first in the market. That's why we're finally like, we need to probably reach out and see what we can do. If anybody has any interest, let us know. But yeah, so thanks for listening to us. Thanks.
I like it.
All right.
Make your way through the food line again. There's some cookies, another drink. We'll hang out for as long as people want to hang out. Another half hour, 45 minutes or so.